My dividend growth portfolio is a real public demonstration of the power of dividend growth investing. This video is my review of the portfolio for July 2021. Hi, I'm Dave Van Knapp. Before I get started, I have a brief request. If you find value in this content, please click the thumb up button, subscribe to the channel, and ring the bell to receive notifications of new videos when we post them. Thank you. I'm going to show you snippets of the portfolio to discuss what happened in June, and then at the end I will display the whole portfolio, and you can pause the video then and examine it as much as you want. I made only one change to the portfolio in June, and it's shown on this slide. I added 6 shares of Merck through my dividend reinvestment program. Merck is a small new position started just the previous month. Merck is a great company selling at a good price, so I was happy to add to the position with last month's dividend reinvestment. It's still only a tiny position, 0.4% of the portfolio after the new shares have been added, but this is how I build things up. If you want to get all the details about Merck and why I bought it, please see my video dated June 23rd. That massive price increase has taken Microsoft to occupy more than 8% of my portfolio, even though I just trimmed some of it in January. Under my portfolio's policy for diversification, that's too big for a single position. My upper limit is 8%. So in the next month or so, if Microsoft's price stays up there, I will trim it again. That's an example of standard portfolio management. What I do in these cases is trim the position back to 7% or so. Then I use the money, meaning the proceeds from the sale, to buy a different stock at a better valuation with a higher yield. In other words, I convert a capital gain into more income, which is the main focus of this portfolio. The last things I want to mention, just let me brag a little bit. In June, through the combination of a dividend increase and those 6 new shares of Merck, the portfolio hit a new all-time high in its annual dividend run rate. It's now bringing in $5,211 of income each year. That's a new all-time high, and it's shown to the right side of this slide. And in the bottom line, if you translate that $5,211 to a percentage, a yield percentage, it translates to a yield on cost of 11.1%, which is also a new all-time high. Here's why that's important to me. This slide shows a bit of my business plan for this portfolio. The primary goal of the portfolio is to build a steadily increasing stream of income in the form of dividends over many years. I don't invest for total return. I don't invest to beat the market. I invest to build what I call a wall of income that can eventually be used to live off in retirement. It's like a paycheck replacement. This portfolio does that, and that's why this is my favorite chart. The relentless growth in income is my main goal. At 11.1% yield on cost, my portfolio is now sending me, each year, cash dividends at the rate of 11.1% of my original investment. That's what yield on cost means. That kind of income generating power was the inspiration for this portfolio when I started it in 2008. I'm running this portfolio as a real-life demonstration, and I'm hoping that these results are inspirational for some of you younger investors who can think long-term ahead to when you might want to live off a growing stream of income such as this one. And to that thought, I will add that these results are scalable. The 11.1% being a percentage could apply to a $100,000 portfolio, a $500,000 portfolio, a $1 million portfolio. Your income would still be 11.1% of whatever it is that you spent originally establishing that portfolio in the first. This slide shows in a nutshell what makes dividend growth investing portfolio, because it shows the 3 reasons that the income each year goes up. The first reason is dividend increases. The stocks for a portfolio like this are chosen for the probability and likelihood that they will increase their dividends each year. There are a lot of companies that do that, and the goal is to find them, buy them at a good price, and put them in the portfolio. I've had 20 increases so far this year in a 29 stock portfolio. Last year there were 30 increases, and by the time this year gets done, there will probably be around 30 increases this year as well. The middle column is the second reason that the dividend stream grows. It's through dividend reinvestments. And we saw that the purchase of Merck, the dividend reinvestment of Merck. I do a reinvestment of dividends like that every month, and it's by buying new shares which themselves generate dividends that causes the income stream to grow. The last column is the third reason, and it concerns portfolio management. The example here would be what I also mentioned earlier, which is the possibility that I will swap out Microsoft because its price has gone up so high that I can trim some of the shares, still have a large position, and use the money from selling those shares to buy shares in a different stock that has a better yield and is probably selling at a better valuation than Microsoft right now, which in my opinion is way overvalued. One last thing that I will mention is that since this is a demonstration of the power of dividend growth investing, the strategy, it does not illustrate results you can attain by continuing to add new money to a portfolio during your working years. I set this up deliberately with a single starting amount of around $49,000 13 years ago, and I've never added any new capital since then. So all the growth in the dividends, all the growth in the total value, all the growth in the number of stocks held, etc., are all the result of things that have happened within the portfolio once I kicked it off 13 years ago. And that basically wraps up this video. Now I'm going to keep my promise to display the whole portfolio. We'll keep it up on screen for 5 or 10 seconds, and you can examine it at your leisure. Pause the video if you want to examine it even deeper. And I'll be back in about a week to tell you what I'm going to do with the AT&T holding in the portfolio. Bye, everybody.